Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me Dinesh Kumar Khara, the Chairman of the State Bank of India. Thank you very much, Mr. Khara. And in the conversation that we are going to do now with you, and you've had several of them, I want to start by uh, getting a sense from you of the past 24 months in terms of the great banking revival in India, particularly for the public sector as well. A clean book, credit cycle coming back, NPAs under check. Can we say that a new great beginning, which has been made recently, will continue 2024 and beyond?
Well, as far as the Indian banking system is concerned, they have certainly demonstrated the resilience in the past, and I think the kind of practices which have been incorporated in terms of the risk management, I think it will go a long way in terms of supporting the Indian banking sector, and also in turn support the Indian economy. All said and done, the banking sector is a derivative of the economy, real economy. Since the real economy is doing well, it offers huge opportunities for the banking sector also to grow. And that is something which you are witnessing. Uh, I think whatever bad lessons were there in the past till the year 2008 or around the year 2008, they have taught lessons to the system, and the system has incorporated them well in their uh, management practices, I would say, and apart from that, I also would like to mention that the ecosystem has got created, which is encouraging responsible borrowing, and even in the payment system also, the efficiency has come in. The digital adoption is offering newer opportunities. So all said and done, I would put it like this: that the banking system is perhaps at its best as of now.
How is SBI positioning itself on the global stage? Because with the domestic economy doing well and you continuing to sort of fire on all cylinders, the obvious focus, and since we are at Davos discussing global matters, what are you doing in this regard as far as the global stage is concerned?
Well, for us at the group level, as far as the international banking book is concerned, that constitutes about 12% of our total balance sheet size. And we have seen decent growth in rupee terms in last 1 year. We are observing that there are good opportunities and we are lapping them all and ensuring that we remain relevant on the international global scene also as far as India's presence is concerned.
Mr. Khara, it's deep winter here, although the sun is out. But by the summer of this year, there is an expectation that a very significant amount of money will flow into India on account of the inclusion in JP Morgan's sovereign bond index for the country. By some estimates, 25 to $30 billion of passive inflows. What's your view on that? Is this expectation correct, and what kind of impact would it have?
I think inclusion of India debt paper into the JP Morgan debt index is a very welcome step. India is always in need of the foreign flows, and this has actually opened up a new opportunity. And also, to my mind, it will also lead to the development of the Indian debt market as well. As it is, we are seeing good traction, but this kind of money which will flow into the country will actually bring in a lot of trading opportunities in the debt paper also. So I think it will lead to the deepening and broadening of the debt market in India, which is a very welcome step. And I expect that even the Bloomberg index will also capture the India debt paper. So the marketability of the paper will improve, and also it will encourage many issuers to come in. So it's a very welcome step.
And it will sort of take care of what has been said, that there should be two twin engines that should fire the entire business. Let's turn our focus to your view on the recent regulatory moves. For example, risk weight being tightened for NBFCs. Then some other moves by the Reserve Bank of India to ensure that sort of unsecured credit growth and risky practices don't happen. Uh, what do you think is the rationale behind the RBI's moves in this regard, and what kind of downstream impact do you see, Mr. Kara?
Well, I would say that these steps were thought in and taken keeping in mind that there should be the healthy growth of the financial sector. And with that in mind, the unbridled growth which was seen in terms of unsecured credit, which was as high as about 30%, it was perceived to be very unusual. And also, uh, I think the RBI's effort is a very well guarded effort because they always ensure that the system should not have any challenges. So, in this particular situation, they were actually concerned about low value credit, which was less than 50,000 rupees, and essentially it was done without any credit assessment. So these kind of things eventually show up in terms of the stress in the system. So I think it was a timely step taken by Reserve Bank of India in terms of ensuring that the unsecured credit should grow in an orderly manner. And also, when it comes to the risk-weighted assets for the NBFCs, essentially to ensure that the cost of credit should be realistic, which should actually capture the credit risk premium also. So this is something which was done with that intention in mind. So I would uh, support the steps taken by RBI and for ensuring that there should be orderly growth in the banking system as far as the credit is concerned.
On the bit about 50,000 unsecured credit that you just mentioned, Mr. Khara, one of the reasons that is being ascribed to the growth is the partnership of many banks and non-banking financial companies with fintechs, and they going ahead in terms of trying to create a market share and perhaps not being able to follow all the best principles. Is that one of the reasons, or is it a combination with the demand of a certain kind?
No, actually, the aspiration of the growing middle class is a reality in India. Availability of cheap credit at times can push the people into the debt trap. What you mentioned perhaps holds good also, but beyond that, uh, irrespective of the players, equally important is to ensure that those who borrow, they should have the ability to repay. And I think if at all this golden principle is followed, it will lead to a healthy growth in the credit, and also at the same time, it will also improve the living standards of the common man.
Was the RBI trying to prevent a repeat of a subprime loan crisis?
Uh, I think it is little more far fetched. I would say that yes, as I mentioned, that the financial system had the lessons to learn from the past. So those were the indications, but perhaps we're not into that kind of a situation.
Comparison is not valid of that kind. Let's turn our attention to something that you've said recently and pointed us towards the interest rate differential that used to exist as far as home loan rates are concerned between India and, for example, the United States. Explain to our viewers what has changed and what does it really mean.
Yeah, well, when it comes to the home loan interest rate in India, it would be somewhere around 8.5 to about 9%. But today, when the mortgage is now coming up for the repricing, even in US and UK, they are being repriced almost at similar kind of rates. But that is in dollar term and also in the pound sterling term. Whereas in India, it is in the rupee term, this loan is available at this rate. And that is one of the reasons why when it comes to, if we look at the developed market, maybe the US Treasury, etc., the kind of rates at which they are now prevailing, the differential in the inflation between the two countries is not really reflected in that. So this actually augurs a scenario where perhaps Indian interest rate trajectory is softer as of now as compared to what we are observing in the West.
And could this sort of be enhanced once the RBI starts cutting rate at whatever point of time? Some people say maybe towards the end of this year.
I think what I would say is that if we look at the current account deficit, which is much in a better shape, and also the way Reserve Bank of India is ensuring that there should be the right liquidity in the system, there should not be excess liquidity, there should not be any deficit in the liquidity in the system. And also, the fact remains that there is not much of supply side challenge in India. I think we are very well positioned to ensure that inflation stays in control, and which eventually will show up in the interest rate also. And also, I would like to mention that Reserve Bank of India has decoupled itself from the global central banks as far as the interest rate movements are concerned. It is actually very closely looked into by MPC as far as the market movement, the price movement is concerned in the country, and based upon that, the decisions are taken.
So, in some ways, Atmanirbhar monetary policy.
Yes, I fully agree with you.
Will you try and hazard a guess as to when we could see a reversal from the RBI?
My sense is that as of now, though we are in the month of November, we are at about 5.5 as far as inflation was concerned. And prior to that, we have seen the levels of 4.9 also. So I expect that maybe towards in the third quarter of this 24-25, we should hopefully see the interest rate cuts.
Your views on the housing market? We've seen an unprecedented boom, and towards the top end more so, despite rates climbing. One, what do you kind of see as the average home loan rate for an average tenure, let's say 20 years? And will this kind of expansion that we have seen in the past several quarters continue?
I expect that there's a huge gap as far as the demand supply is concerned, as far as houses are concerned, and we get to see decent demand coming up quarter after quarter, and I'm quite hopeful that considering the demand which exists, this kind of a growth in the housing sector should be there for a foreseeable future.
Mr. Khara, as we wind down the conversation, what sectors do you see driving growth in the current calendar year and beyond?
I would say that we expect the growth to be quite broad-based. Retail will continue to grow, led by mortgage loans. Similarly, we expect SME will continue to grow. And even in the rural space also, we are seeing decent opportunities. Of late, we have started seeing traction even in the corporate book as well. Because corporates earlier were depending upon the cash which were available in their balance sheets. But now they are approaching for raising loans also for supporting their investment programs.
And will that continue to support the outlook in terms of profitability and margins that you have provided in the past?
I'm quite hopeful.
You're quite hopeful. Mr. Dinesh Khara, you're always an optimist as far as the Indian economy is concerned, and for your bank as well. I thank you very much for your time with us today. With that, it's a wrap at the India Today Group Business Today studios here at the World Economic Forum in Davos. We'll be back with more. Until then, goodbye.